Hey guys, answering a fun question about capital gains. And capital gains is rarely used in the same sentence as fun, but let's go there. Okay, so first of all, disclaimer, I'm not an accountant and I am not your accountant, so I can't give you tax advice. So what is capital gains? Capital gains is the tax you pay on the growth of an asset. So say you buy a stock and you sell that stock, you will be taxed on the difference between your purchase price and the sale price. The same thing can happen to a house, and that is based on what we call your basis. That is what you bought the property for minus any improvements. So say you purchased property at $500,000 and you later sold it for $700,000. Your basis is the $500,000 minus any improvements, and the gains would be on the difference between the 500 and the 700,000. That's your capital gains exposure. But what happens when you inherit a property? You didn't buy that property. Well, there's something called a step up in basis that someone who inherits property receives. And that step up in basis is the value of the property on the date that you received it. So in that same prior example, if you inherited the property at $700,000, well, there may not be any capital gains exposure. There may be if you hold on to the property and later sell it, but a lot of people want to avoid it. And there are ways to avoid that exposure. One way, obviously, is to sell the property for either at or less than the value that you inherited it at. And if you sell it for less than the value that you inherited the property at, there is an option to take that as a loss on your tax return. So if you have any questions that we can help you with, be glad to address them with you. Thanks so much.